Hello there, I hope that you're doing well. In today's trade breakdown lecture, I'm going to share with you how I was able to buy the low of the day on NasDaq. Here you can see my executions being plotted on the chart, and as you can see, I went long multiple times in this area and took partials accordingly. Eventually, my full close was at the previous day high. You can see that I bought the low of the day and the market expanded beautifully afterwards. If you want to see the real-time recording of this execution, I posted that on my YouTube channel and I will be sure to leave a link to that video in the description below. Before I break down Tuesday's delivery to you, where we saw this beautiful expansion towards the upside taking place, I will first share a clip from my mentorship review, which I shared during the Roland session prior to the 9:30 opening bell. This means that you will be able to get an insight into my analysis in advance of the trading day, meaning you will see what range I was monitoring and what my drawn liquidity was for the day. At the hourly chart of NasDaq. Here on the hourly chart of NasDaq, and as you can see, NasDaq has been repriced into the hourly BC, which I shared with you to be the range to monitor for NasDaq. As long as NasDaq does not displace below this hourly BC, I'm favoring a run towards buy side liquidity next. You have just seen my mentorship clip review in which I shared with you that I was monitoring this specific BC right here that was anticipating higher prices as long as NasDaq would not displace below that BC's price range. My drawing liquidity on the upside was the previous day high and the previous week high. I'm going to walk you through this whole delivery which took place. So what I want you to do is I want you to pause the recording and try to explain to yourself first why Tuesday delivered the way it did and why it ran up higher so aggressively after the 10 o'clock high impact news. I hope that you paused the lecture and that you have broken down for yourself based upon this RE chart why Tuesday delivered the way that it delivered, but I'm going to walk you through it now. What I want you to see on Monday is the swing. I want you to see that on Monday, the market was consolidating initially and then began to get repriced towards the downside. Notice how slow the repricing towards the downside was. There was a lot of back and forth going. Notice that there was also a lot of consolidation which took place. Eventually on Monday, we reached the discount BC, which I had outlined, this blue box right here. We then saw Tuesday open up and we saw the market initially begin to run higher. It then began to drop lower and we saw the market drop below that midnight opening price right here and below the Asia low, which is this low right here. Therefore, to me, what I was anticipating is that the drop below the Asia low and below this previous hourly candle was manipulation. Why? That's something I will share with you on the lower time frames in a bit. But what I want you to understand is that because my anticipation was that we were going lower to go higher, because I'm bullish, I'm thinking that I need to wait for manipulation to take place towards the downside. Then I need to wait for the time to be right for distribution higher to take place. And that is where key algorithmic signatures come in play. What I want you to investigate is how NasDaq and ES traded relatively to this low right here. Where you can see that NasDaq traded a lower low, I want you to investigate what ES did relative to this Friday PM session low. You will see that there's a Kraken correlation between NasDaq and ES there. As long as that Kraken correlation would last, I was anticipating higher prices to come in play. Notice that the bodies never closed outside the price range of this BC, which was my point of interest. Surely you can see the wick go below it right here, but this is manipulation which is taking place. And that is what I'm anticipating. I'm anticipating manipulation to take place before distribution towards the upside will take place. At 10 a.m., we had high impact news, as I just mentioned already, and we saw the market begin to run towards the upside, drawing towards the buy side liquidity resting above the previous day high and the previous week's high. Notice that we form a breakaway gap right here, and this is a sign of IPTA being in a rush to reprice towards buy side liquidity objectives next. Breakaway gaps are a sign to you that there's a rush and urgency for the market to run into a one-sided direction. We see beautiful bullish order flow taking place, and eventually the draws on liquidity get met. If we drop into the 1 minute time frame, I want you to pause the lecture again and I want you to try and break down for yourself the delivery which took place inside this 1 minute fractal. Please pause the lecture. I know that some of you like to skip this step and you like to just treat my lectures as if they are some type of Netflix series, which you can just binge watch, but that is not how you get the results that you look for. You get the results that you look for by investigating the fine details within my lectures. Pay attention to the words I use, pay attention to what I annotate, pay attention to what I showcase. And when you begin to do those things, trust me, the growth will come. Because once you see what I see and what I show to you, you will never unsee it. You'll be able to look at any market, any time frame, and you will be able to see these algorithmic signatures over and over again. I hope that you passed the lecture and that you broke down what you saw inside this delivery, but I'm going to walk you through it now. First, what I want you to see is that I've plotted the high and low of the time cycle from 7 to 8:30. This is the first 90-minute cycle of the morning session, as I've been teaching it to you. We then see between 8:30 to 9:30 that the market is just consolidating for an hour straight. It's going back and forth, back and forth. Why is this the case? Well, we know that there's high impact news at 10 a.m. Therefore, what we can anticipate is that at 9:30, when the regular trading hours open, we are going to see a volatility injection take place. The move that takes place at 9:30 is usually not the real move. Therefore, this is manipulation towards the downside. At 10 o'clock, we see that high impact news taking place, and that is the beginning of the real distribution higher. If I put some lipstick on this chart then, what I want to see is that at 9:30 right here, the market initially runs higher and takes out that previous 90-minute cycle high. The buy-side liquidity resting above this high. Notice that we wick above it and then immediately reject it. We draw towards the downside. What do we draw towards? Well, we draw towards that previous 90-minute cycle low, meaning the sell-side liquidity resting below this low, but also below the Asia low, this black line. And by doing so, we also trade below the midnight opening price. So let me just summarize. We're trading below the previous cycle low, we're trading below the 9:30 opening price, and we're trading below the midnight opening price, whilst we have a bullish bias for the day because of the hard time frame analysis, which I shared with you as part of my mentorship review. We then drop below that midnight opening price, and the movement below that midnight opening price and below that Asia low is manipulation which is taking place. At 9:35, we form this close candle with this long wick. The market trades into this CB right here on the left side of the curve, and we see it reprice lower once more, trading into this up close candle, its respective wick. This wick right here is a bullish rejection block. This right here is the array which forms at the exact reversal points. Meaning, you need to understand that the PD arrays that ICT has created, there's a sequence to them. If you pay attention to them from low to high if bullish, you will see the sequence in the formation of the arrays. And that is something that not many people understand. However, that is why this is a bullish rejection block, because the time was right for the market to form a low at 9:35 a.m. And from that moment in time, we can anticipate that higher prices will take place. Why? Because everything is already signaling to us that the job on the downside has been completed by this explosive move towards the downside. Because let's just think about it for a moment, right? From 9:30 on, every single retail minded trader, they see this drop towards the downside. Maybe even traders that are trading based on the same algorithmic concepts, they would see, oh, we see imbalances get created right here, therefore we should go market short because the market is showing premium rates get created, right? That's their thought process. Or they just see weakness. They see nothing but lower prices since the 9:30 open. We cannot look at that and think to ourselves, oh, the market is in fact bearish. No, because we know that we're going lower to go higher. That right there is very important, because if you're bullish, that is what you're looking for. This is the engineering of buy-side liquidity. Above this high, a lot of buy-side liquidity is being engineered, because from the 9:30 open, every single retail-minded trader will think to themselves, well, you know what, the market is showing weakness and therefore I should just go market short, place my stop above the nearest high, boom, that's the job done, that's my analysis done, there we go, right? They're chasing price here on the downside. That is exactly what I'm looking for. I'm looking for manipulation towards the downside taking place. Because you need to understand that whenever you see a quick sudden move like this, this leads to a smart money reversal, which will take place soon. Eventually, the market begins to run towards the upside and we draw towards that 9:30 open price. When I saw the market fail to displace through that 9:30 open price, I took partials accordingly. We then saw a retracement taking place into this 1 minute BC, into a discount of the range from this low to this high, and we then saw the market continue to run towards the upside, taking out eventually the engineered buy side liquidity resting above that 9:30 high after the 10 o'clock news. The market then began to spool towards the upside and eventually dropped even higher, as you saw on that hourly chart. Now, if we go into the 15-second time frame, you will be able to see the level of detail within this delivery present. I'm going to walk you through it, so don't worry. Please note that the 15-second time frame is not required to trade upon. However, I like to use the 50-second time frame to get very precise entries with relatively low risk in terms of points. The reason why is because when I know the time is right, this is what I am able to do on the lower time frames. And you're probably looking at this and you're like, how? Trust me, this took me years to master, but when you get to the stage, you will see that these markets are fractal. You will be able to see that the same logic which gets utilized on the higher time frames is applicable to the lowest possible time frames. I could even be trading on a second chart, on a 1 second chart, and the same signatures would be present. And that's the beauty of the way that I view these markets. But with that being said, what I want you to see is that from 9:30, we initially run higher, taking out that previous cycle high. Random reaction to that previous cycle high, right? Random reaction to that buy side liquidity pool, which you already know to be very significant, because if you have been paying attention to my lectures, I've literally given you very specific time windows which you should mark up the highs and lows from, and you should pay attention to the reactions to those levels. Market takes out that high and rejects it. It begins to run towards the downside. Eventually, we take out the previous cycle low, and we see the market drop below that Asia low and that midnight opening price. From here on, we are seeing the signatures that confirm to us that a smart money reversal is forming. Meaning, what we're seeing is that we're seeing, first of all, a shallow consolidation taking place, where there's a lot of back and forth going. What ends consolidation? SMT ends consolidation. Investigate into market relationship on this low formation right here. We see the market reprice into this CB right here, as outlined on the 1 minute chart as well. We form a high there. The market has a drop lower trading into that bullish rejection block based upon the 1 minute chart. And we then see the market displace higher. This upclose candle right here signals CSD. It signals to me that the time is right for the market to begin to expand towards the upside soon. From this moment in time, every single discount array is going to function as support on price and can be utilized as a buying opportunity, because the time is right for buy side delivery to take place. And I know that is probably way too advanced for the majority of you, but for those of you that have been studying my content for a while, you will be able to listen to that and you'll be able to smile because you know exactly what I'm referring to. You see the market create this BC right here, and the market finds support there before expanding towards the upside. Notice that at this moment in time, it also trades above that Asia low again. That right there is a key signature because it shows that the previous cycle low is getting displaced through and is beginning to function as support on price at the right time. The market displaces through this high right here. It creates a BC. And why is this signature so important? Because this signature right here is the market structure shift pattern, as I've taught publicly on my YouTube channel. The market structure shift pattern is the strongest reversal pattern, and it takes place in the majority of smart money reversals, where you can see a CB on the left side of the curve, a high forming inside of that CB, and a BC displacing through that high. The market retraces into that BC, into that specific high, before expanding higher, drawing towards that 9:30 open price. Notice that the movement from this BC to this CB in a premium from the range from this high to this low is already a beautiful trade, and that could easily be the day done. However, what I was anticipating is that we were going to expand way higher for the day. Therefore, my idea was, okay, I want to take partials already accordingly inside of the market maker buy model fractal from this high to this low to the candle which will eventually trade through it, but I also want to leave a runner. Therefore, when I saw the market drop lower into this BC again, into that old market structure shift pattern high right here, I wanted to see the market form a low here and I wrote out in my live recording, final chance, meaning the final chance for the market to begin to expand higher into my anticipated direction. I was waiting for another low formation here, followed by a new buy program. Notice that we see a BC get created right here. Market retraces into a discount of that BC, and it then begins to expand higher beautifully. So if you were not long yet and you did not participate in this run higher, then there were new opportunities inside of this area as well to go long. Notice that new imbalances formed right here, which could have also been utilized as buying opportunities. What I want you to investigate is the fact that I was able to anticipate this retracement taking place. Eventually, the JOLTS job openings get utilized to reprice towards that engineered buy-side liquidity before the market begins to slowly expand towards the upside for the remainder of the day. As you know, with me, I always save the best for the last so that the viewers that are watching my lectures all the way to the end gain the most value. Here you can see that we're back on the hourly chart, and what I'm showcasing to you is step that being in play. What I want you to see is that on Tuesday we formed the low of day at 9 o'clock. This 9 o'clock hourly candle referred back to previous 9 o'clock hourly candles. For example, this 9 o'clock hourly candle right here. Secondly, this 9 o'clock hourly candle was important as well. And you might be wondering, how come that this is so important? Well, what I want you to see is that there were a lot of things lining up with each other that were signaling that the low of day should form in this area, because these highs were simply too clean. A market doesn't top out of a consolidation. It doesn't occur. This is where buy-side liquidity is being engineered. So how low can the market potentially drop? Well, it will reach into a discount of the current range. It will reach key levels at the right time, and then it will reverse, drawing towards the real direction, which is higher. And that is what you can beautifully see here, where this 9 o'clock candle referred back to previous 9 o'clock hourly candles. With that being said, this lecture comes to an end. I hope that you found it insightful. Please let me know if you want to see more trade breakdowns like these in the future. And I want to wish you all the best and good luck with your studies. Be safe.